Good morning. Big update this morning. The House of Representatives just pulled an all-nighter and officially passed the massive, big, beautiful bill packed with Trump's tax cuts. Now, it passed by just one vote, 215 to 214 after some late-night deal-making. Now, you might be wondering, what's in it for you? Well, one of the headline items, and the reason I'm making this video, is the No Tax on Tips Act, which just passed the Senate the other night and was included in the bill that just cleared the House. This means we're one step closer to making tips partially tax-free at the federal level. But that's not all. There are a few other high-level tax changes in the bill you should know about. Remember the Trump Tax Cuts and Jobs Act from 2017? They're getting extended, and that's good news. The cap on state and local tax deduction, or SALT as they call it, would jump from $10,000 to $40,000 for people making under $500,000. This will get more people itemizing their deductions and benefiting with a higher deduction on taxes. Previously, it was capped at $10,000. And there's also a push to eliminate taxes on Social Security benefits, though we'll have to see how that plays out in the Senate version. So yeah, this is a huge package. But for this video, I'm focusing on what matters most if you work in a tipped job, like waiting tables, doing hair, or anything where you report cash tips. Let's break down what the No Tax on Tips Act actually means for you. Hey, Noel here, your friendly neighborhood accountant. As I mentioned, the US Senate just passed something called the No Tax on Tips Act, and it'll be a big deal for tipped workers. Those are people like servers, bartenders, hairdressers, anyone who regularly reports cash tips. It has passed the House and the Senate, final version pending, and then to be signed by the President. At this point, it'll likely become law. With the Senate version, you'd be able to deduct up to $25,000 in reported cash tips from your federal taxable income. So if you're someone who gets tips and reports them, which you're supposed to, this could lower your tax bill. The good news is you don't have to itemize to get the deduction. It's what's called an above-the-line deduction, which means you don't have to itemize your deductions. You can take the standard deduction and still qualify. Now, there are some important limits. If you make more than $160,000, this won't apply to you. It's also for employees. And if you're self-employed, you're out of luck with the Senate version. And it only applies to people in industries that are traditionally tipped. The Treasury Department plans to put out an official list within 90 days once the bill becomes law. And one thing to be aware of, this is a deduction, not an exclusion. That means you still must report your tips, and they're still subject to Social Security and Medicare taxes. So yes, you'll still see FICA taxes taken out of your paycheck, but that's not necessarily a bad thing. Those payroll taxes help you build up Social Security credits and retirement benefits down the line. Also, this is just a federal tax break. Your state may still tax your full tip income unless it passes a matching law. And here's one more thing. The Senate version has no expiration date. It would start in 2025 and just continue on. The House version is temporary and includes self-employed workers. So the two sides still need to work out the differences before anything becomes law. Bottom line, this bill could be a great benefit for a lot of hardworking people. But it's not official yet, and not everyone will qualify. I'll keep you posted as things develop. Let me know in the comments. Do you think this bill is good for American service workers? By the way, this Saturday I've got a really good video dropping on how to survive an economic meltdown. No fear, just facts. You can get a free sneak peek if you head over to my Patreon. The link's down below in the description. Thanks for watching. Be well, and let me know if you like this style of video.